This is going to be a unique type of demo. I mean, rather than a formal introduction to the product, where we might examine the full gamut of available data points, or rather than a one-on-one training where we would walk through how to perform any of these particular items. What we thought it would be productive to focus on is a couple examples from real-world clients, feedback that we got from existing users of I-Biz on aspects of the system where they gain the most benefit. And what I have listed on the screen here are the four examples of benefits that we're going to walk through fairly quickly today. Each of these worksheets along the bottom has different types of analysis. And so we want to do a letter analysis. We just scroll to the letter activity worksheet. And this is the starting point for the analysis, where I-Biz has standardized reports that form the starting points of most of the analysis that you might want to do for your company. This particular report is showing all of the various letters that your company has sent, in this case over the last 6 years, and it has a kind of letter quantity. So for this letter-based analysis, one of the first things I want to do is focus to the last 12 months. One thing we do inside of I-Biz is during our nightly processing, we do a number of calculations on your data. And one of the most interesting calculations we do on your data is we say, for all of the letters that have occurred in the past 12 months, let's do some follow-on analysis for the accounts which received those letters, and let's see whether after that letter, for that account, whether a payment was received within 30 days. And that's the attribute or the measure that we're going to be adding to this report right here. We want to look at not just the quantity of the letters that were sent, but the effect of those letters, and some indication of whether those letters resulted in a payment being received. So I'm filtering to the last 12 months. One thing I might want to do here is show a grand total. So I'm going to be walking through this fairly quickly. During any sort of training, we would be spending a little bit more time, talking about how to actually effectuate the things that I'm doing.
Has joined the conference.
Once I have this total added, I'm simply going to sort based on grand total so I can see the letters that I send most often. In this case, there are still many hundreds of letters, and we probably want to focus this to the letters that we send a material amount to. So the I-Biz system does have some powerful sorting and filtering capabilities. All of the analysis is performed against an OLAP cube, which is basically a super speedy aggregate database. So here we're going to say I'm going to focus to, let's say more than 350 letters. And so we have a fairly a smaller set of letters to work from. And here all I'm going to do is I'm going to add this paid within 30%. And let's move it like this. So here we have the number of accounts sent for each letter type. Sorry, the number of letters sent for each letter type. And here we have an indication now of the percent of those letters by year that received a payment after the letter on that account, on the account that received the letter within 30 days. All I have to do here is now sort my grand total on percent received. And you can see here the vast difference between the different letters that you might be sending to your debtors and the results of those letters in terms of motivating some type of payment. Obviously we have the a strong success rate on post-dated reminders. But this will analyze all of your letters
has left the conference
and help you explore which letters you might want to send. And so this can form the basis of a productive champion-challenger type analysis, where you might try out a new letter that maybe is a little bit kinder or gentler to your debtors and see if it has a material benefit. And it would really just take the 30-day waiting period to be able to perform that analysis. One more just kind of bonus aspect that I wanted to highlight is if you wanted to do this same analysis for a particular client or a particular debt type or particular score band, a particular classification of clients, that would be very easy to perform. Okay, you can see that what I've done here is I've just focused to a particular client classification. We could, if we wanted to, bring this client classification in and maybe look at hospital first versus hospital seconds to identify on a percent basis, whether there's any difference in response rates based on the letter. The next example I wanted to walk through was how to identify problematic account sets and then how to drill down on those account sets in order to perhaps load them back to Intellect or do something different on those accounts. So one of the examples I wanted to show you was maybe this last worked analysis. This last worked analysis is a report template that very simply shows your open portfolio, number of accounts, and current total remaining balance. And it's breaking up those number of accounts by what we call last work groups. What we do is we take the last work date on the accounts, but in order to make that productive for analysis, we take, we do a calculation on that last work date to today to see, well, how many days have transpired since we last worked that account, and then we bucket or group those number of days into categories. And those categories are customizable based on how you work your debt. This particular client has just 3 buckets. There's debt that was worked in the last 45 days, debt that was worked more than 45 days ago, and then we have an interesting bucket here that says debt that has never been worked. And I thought this would be interesting to focus on because there's a large amount of debt here, about 8,000 accounts that has not yet been worked. And I wanted to walk through an exercise on how we might explore that debt to justify either why that debt has not been worked, and if we can identify something that is still problematic after our exploration, we can do a drill down in order to pull those individual accounts out and either load them to a dialer or send them to a vendor. So what I first wanted to do was focus on these 8,000 never worked accounts, and I have a number of hypotheses on why I might have so many accounts that have not been worked. Well, perhaps they don't have a phone number. So we can analyze whether they have a phone number. All I'm going to do is I'm going to go over to my field list here. My field list has all of the data elements from the Intellect system that I'm interested in for analysis. And these data elements are grouped by category, and then, for instance, on something like the account category, the account dimension, where there's just so much data or so many characteristics or attributes we might pull from, the attributes are further categorized into folders so that we can quickly find the information that we're interested in. One of the pieces of information that we expose in this primary folder, where a lot of the common attributes are, is this phone count. So all I'm going to do is I'm going to drag in phone count into this analysis, and it's going to break out these 8,000 accounts into how many primary phone numbers they have. So my hypothesis was, well, perhaps all of these accounts don't have a telephone number, but I can see that actually does not bear out. It is the case that 2,400 of them do not have a phone number, but the vast majority of them do. What I might want to do is actually drill down on these 2,400 accounts. I can do that simply by right-clicking and going to a number of these predefined drill downs. You can see there's one that aligns with the intellect status report, and there's one that really lists a whole bunch of attributes. You might have other customized drill downs for your company that might conform with your dialer format or other types of vendor formats. And we can drill down on those cells, and we can get a list of, in this case, the 2,000 some accounts, and we can get the account detail. And what I might then do with this account detail is send this to a skip vendor, or print this out and have someone manually skip some of these debtors because we don't have contact information for them. And obviously, when we don't have contact information for debtors, we recover at a much lower rate. Just as a quick tangential aside, I can quickly quantify that. If I go to my stratification chart, this is intended to look at recovery rate and origination amounts. And if I'm interested in knowing how I recover on accounts that don't have phone numbers, all I have to do is bring that same attribute into this report template. And you can see my average recovery rate is 14%, but my debt that has no phone number, which is the majority of my debt, recovers at 6%. So being able to identify accounts that do not have contact information and then take action on that by drilling down to those problematic accounts can be quite productive. Let's continue on this last worked analysis, and we've determined that, okay, I can exclude the accounts that don't have a phone number because I can skip them and do something separate from them, but I still have this set of 5,500 accounts that have at least one phone number and still have not yet been worked. And so what are other reasons that debt might not be worked? Well, just thinking through this, I can think of the fact that maybe they're small balance accounts and we intentionally don't want to work some of the very small balance accounts. Or perhaps they're very recent placements that haven't yet had the opportunity to be worked. So let's quickly use I-Biz to examine those two hypotheses. I can go back to dim accounts, and to analyze whether they're small balance accounts, I can go into my data folder, look at all of the various data elements that I can use to segment my debt, and maybe I'll just bring in origination amount. It's now going to segment those 5,500 accounts by, I think we have 12 or 15 different buckets of placement amounts. And I can see, this is kind of more interesting, there is a large amount of debt. I'm going to move this. There is a large amount of debt that is less than $100, about 3,000 accounts. And in my business, I'm not working accounts that are less than $100. So it makes sense to me that these small balance accounts are not worked. So what I'm going to do is I'm going to exclude those categories.
Has left the conference.
Now I've excluded those categories, and I'm still left with 2,500 accounts that have never been worked. So I'm going to save those filters, focus on those 2,500 accounts, and now apply my last hypothesis against those 2,500 accounts to see if I can explain why they have not yet been worked. My last hypothesis was perhaps they're all recent placements. So I'm going to go to my placement date dimension. I'm going to bring in my year-month hierarchy and see when these 2,500 accounts were booked. And, okay, I can see in 2011 that maybe 40% of them were booked in 2011. I can explore 2011 further to see that, yes, actually, the 900 some accounts were booked just this month. So maybe they haven't had an opportunity to to be worked yet, I can now filter to exclude those. I'm going to say I'm really only interested in debt that was placed before, let's say, the 1st of March. It's going to run this filter, still on the same set of accounts that where I've filtered out the balances less than 100 and where I've filtered out accounts with 0 phone numbers. And I finally have a focused result set of 1,600 accounts that are still kind of what I would consider offenders. They make up a balance of $1.5 million, and this would be a problematic result set that I could then drill into, keep in Excel, or consolidate the Excel file so that it just lists the company number, the account number, and a particular smart code that I want applied to those accounts. And I can load that Excel file back into Intellect, apply the multiple smart code application program on it, so that accounts that were identified through the I-Biz platform can be worked differently on the Intellect or the RMX operational system. The third example I wanted to walk through is a quick one. It's just a basic best time to call analysis. And the report template out of the box will help you accomplish our goal here, which is to examine whether our work efforts or staffing policies align properly with the best days of the week or the best hours of each day to contact the right party, to contact my debtors. So this report is a basic report. All it's doing is it's examining all of the smart codes on your system. Your smart codes are designated so that some of them are identified as attempts or calls, and others of them are defined as promises, which are obviously right party contacts, refusals, which are right party contacts, or just contacts for right party contacts. We can take that smart code information and then analyze the time of the day that the smart code was applied and the day of the week that the smart code was applied. And if we just segment our debt over a particular date range, in this case we're looking at 2011, but we could really be looking at any date range, we can get an indication of what days of the week or times of the day we have the best right party contact rates. I've applied a color-coded heat map in Excel, just using this quick conditional format capability in Excel, so that I can quickly focus on those segments that have a higher right party contact rate. And even a 1 or 2% increase in right party contact rates can really have a significant effect on your bottom line. So we do this here, and we notice that Wednesday early afternoon, Monday morning are probably the best times of the day to call our debtors. And the next part of this process is to explore, well, what is the current concentration of my calling activities? All we really have to do to access that information is see, well, how many calls are we making during those segments? If we apply a heat map over that, where we're looking at the majority of your calls occurring Thursday morning or Tuesday or Wednesday after 5 o'clock. And these are not your optimum times, and this would actually be an indication of some type of queuing or penetration issue where whenever you burst your calling, you depress your right party contact rates, and that would be a problem that we could then further investigate on the system. Well, I-Biz is already incorporating all of your smart codes. It's already incorporating all of your letter events. It's already incorporating all of your monetary transactions, including your payments and the commissions that you might earn on those payments. So it would seem like we have access to the full universe of both cost and revenue elements in your company. So what we've done is we've applied a cost factor to each of those transactions, each of those events. And we're assigning a cost to loading an account, we're obviously capturing the commissions. We're assigning a cost to the letter, assigning a cost just to, for our accounting staff, and assigning a cost based on smart code. And that cost based on smart code is different based on whether the smart code is a promise, a contact, a refusal, an attempt, or some just other miscellaneous smart code. And we can get to any level of sophistication that you might want to get at in terms of applying these cost factors in order to have some accurate activity-based costing. And once we have that, because we are then conforming that information by date, and we have all of those pieces of information by account, and therefore by any account attribute, we can do some really powerful and interesting analysis. And I wanted to walk you through that analysis. First off, what we're looking at here is just some basic income statement numbers, where we can look based on calendar date and see, well, based on year or month, how much we have in expense and how much we have in revenue. And obviously, this has to be a fairly intense and iterative process where we build in assumptions into I-Biz to basically generate an income statement for you, something very similar to this income statement where we have your expense items and your revenue items, and then you actually compare these income statements with your actual financials, your actual P&L, in order to properly align the two and tweak any assumptions that we might have on all-in costs with your actual expense level costs. And if we can get this to a level of some degree of accuracy, the fact that we can then parse your P&L by client or debt type or score band or anything can be quite powerful. In this case, we can quickly switch this basically calendar-based income statement to a vintage-based income statement where we know about how much money we spend on each of these items at each month on book. Let me focus this down to a couple months on book so that we can get a better feel for what information this is showing us. Let's just say, let's look at the first 12 months post placement on an account. Okay, and what this does is it shows us that obviously our expenses are front-loaded, where we have the majority of our expenses in the first 3 months for this particular client. Commissions are also front-loaded when they're largely occurring 1 or 2 months after placement, probably based on all of this front-end collection activity. So now that we have kind of a month-on-book income statement, what we can then do is we can take a running total, or we can take a cumulative total of our expense line and our revenue line. So our expense line in this case is this green. It probably doesn't make sense. I should switch these colors. But we have expenses in green, we have our revenue in red, and if we take our revenue minus our expenses, we have the holy grail of collection analytics, which is a profitability curve. This profitability curve, which we can look at in more detail here, basically tells us that across all of our accounts, we reach profitability at about a month and a half. So for any account that we place, on average, we're profitable on that account a month and a half after placement. To do this analysis out of I-Biz and to be able to then segment that profitability curve however you'd like to construct your analysis, that's where you get a lot of real power. So for instance, if I wanted to take this profitability curve and say, well, let's look at the profitability of the different ages of debt that we work. can see right down here, it's running a little OLAP query. This is a more intense report, but here we go. It's taken all time, and it's looking at your various debt age categories. We have our very fresh paper, which we can see right here, 0 to 3 months. You can see the majority of the debt that we work in this particular client is 4 to 6 months. It has a later profitability point. So here we're looking at the various levels of profitability by debt age. We can see, interestingly, that we don't do a very good job or either don't have much quantity on the 36 plus or 24 to 36, 2 to 3 year or 3 year plus debt types. We can do this by any attribute. So if I wanted to look at my profitability by score band, I could do that. Here we're looking at 0 to 100, 100 to 200, and all the way up. This is an intellect score, I believe. And here we start to see some really interesting phenomenon here. I'm going to clean this up a little bit, just get rid of those markers. And this is really interesting. We're now seeing that we have 5 or 6 different debt types, different score bands that are never profitable. We see we have our 400 accounts, we have our 300 accounts, and these are accounts where we have expense that does not get paid back in revenue, and we might want to take action based on these results and maybe send fewer letters or make fewer calls on these particular accounts, or maybe we'd want to parse this up further by client or by vintage in order to see whether our cost reduction activities are having an effect. I could do the same thing. Instead of looking at this by debt age or score bands, we could actually take all of our clients and analyze each client's profitability using this cube. And this would basically show us, well, we have some very bad clients where we might need to sever that relationship. I'm going to scan this out here. Here's a very good client. And you can see the clients are listed here, and we can see the unprofitable clients versus the profitable clients. Don't want to show too many names here, which is why I've parsed this off to the side. But you can see the structure of the analysis and how that might be beneficial.